Good morning, everyone. Thank you so much for watching my YouTube channel. Today, guys, I'm going to talk about SPY, fix, and dollar. And guys, let's start with the SPY. You see, SPY, guys, closed on Friday with a green candlestick, but you see, generally, SPY is bullish, and we are moving forward, guys. So, since SPY, guys, started from 4,000. Gradually we are moving forward, and see on RSI is still bullish, means guys SPY is still going up, guys. So I think if you are going to stop the rate hike, SPY will reach even 5,000. And let's see, US 100 index also is bullish. Remember, this one, guys, is carried them amongst of the meme stocks. It started from 1200 down here. It's very bullish. 71% RSI, indicating it has more room to go to moon. And then let's go to the Dow Jones Industrial Index. Also, this one, guys, you see, is so bullish, but it's not like a SPY and US 100. It started 32,000, and right now we are at 34. We have this resistance over here. We break out, we are going to see 30, 34,800. Remember, we are right now currently around 34,600, which is resistance, and we are seeing moving more forward. Stocks is very bullish, and I told you, fix, guys. You see, fix right now is very bearish, downtrend. We are still moving downtrend, and the last video I did, guys, I say if you think like some stocks like Tesla, Apple, Facebook, or Meta, all of the stocks is moving forward. Fix, guys, is going to be. I saw news. I was saying it's going to be less than $5 by 2026, and that means, guys, if we are going to move from right now, this 2023 to maybe 2025, we are going to move forward, and you cannot see fix, guys, moving like to $20 again. I don't think so, because right now I don't think we don't have any recession, so fix is going to moving down. uh, Finally, let's see the dollar. Dollar, guys, break. I did a triangle very well on the fix, and when fix, guys, is dollar, if the dollar is going to be more strength again, like it's going to break out, that will be next year, 2024. And when you see here very clear, you see maybe early 2024, but I'm not sure if you see already breaking is oversold. Maybe it will come up, it's going to stay down here, dollar. So we know stock is going to move. Just like dollar is, it will not go again reach this price. You see, like 105, 100, and you see highest was 114. Remember this one, guys, when red tide was very high, and finally inflation is cooling, and now we are going to moon. So, guys, let's go and hear the news. Let me give you news, and let's hear what's going on. Okay, let's hear now.
To walk us through the week that we had and really kick us off of what the rest of the few weeks are going to mean, David, is this really the turning point for the dollar?
I think as far as the market's concerned, there's definitely a bias, without question, towards that. It is. They're looking for basically the Fed to cut moving forward next year. Basically, the market's going, okay, the Fed, you're going to hike in July. We're giving you that. There is a chance of another hike, but really the market's going, we're looking for cuts next year. We're looking for about 2 to 3 cuts in the first half of next year. And that's obviously based off the CPI data and the PPI data that came out last week. It came in a lot better than expected. So this idea of a smooth landing, there's certainly data to back that up at the moment. And the market is very happy to run with that idea, and run with it is. However, having said that, if you look at the inflation expectation data that came out on Friday, particularly the 5 to 10 year, which the Fed really does look at, that was slightly higher than expected. So the idea is there is a worry that is inflation, even though it's coming down, is it becoming a bit more entrenched? And if it is, the Fed will say, well, that therefore warrants more Fed rate hikes. So it's a bit debatable at the moment which way this is to go. The market is definitely keen to look for data that goes, it's going to be a soft landing. The Fed is going, slow down a second. We're certainly moving forward, but we're not quite there yet. And remember, it is the Fed that makes the decisions on the rate cuts, not the markets, really, at the end of the day. So markets are going rate cuts, the Fed's going, let's wait and see. And so it's interesting how hawkish the Fed sounds at this July meeting.
Right, and David, to your point that the data will be key really for both sides, right? Whether that's the Fed or markets. This week, I think you have retail sales, inflation out of the UK, I believe midweek or Thursday. Just take us through what's top of mind for you as we just get started this week.
Yeah, well, as you rightly said, it's the two sides of the equation. So there's the Fed side and obviously there's the other currency side. So obviously the China data that's coming out today is very important. Certainly that will impact obviously the yuan and risk sentiment. So the Aussie dollar and Kiwi dollar, two currencies to look at for there. Then moving forward for other data, retail sales in the US, does that add to the idea of this soft landing? And also certainly in the UK inflation data, obviously the market's looking for the Bank of England to hike above 6%. And does that inflation data come in hotter than expected? If it does, do we go back towards this 6.5 area that the markets were looking for the Bank of England to hike just a week or 2 weeks ago? So, and if that is the case, obviously that'd be positive for sterling and bad for the dollar. So going forward, those are really the key points to look forward to this week. As we go to next week, which is very important, of obviously the Fed, Bank of Japan, central meetings.
So let me get started with what we're expecting from the Fed, because it seems that July rate hike is already baked in, but how carefully will you be watching the forward guidance, and what will you be looking out for?
I agree with your assessment. I do think it's baked in. The Fed is in blackout now, so we won't have any commentary, but lots of Fed speak going into the blackout and everything tilting very much in the direction of getting this hike in July. The chair, of course, will have his press conference, and I think that's really where the focus will be at this meeting. I think the decision itself and probably the language in the statement is going to be pretty straightforward, but I would expect the chair to put his own stamp on his assessment of whether or not additional hikes will be needed. Of course, he'll want to reserve the option. Everyone always likes optionality to do so. There's a lot of data between this meeting and the September meeting, a very important speech at Jackson Hole. So I don't expect a particularly hard lean to indicating a hike in September, but they'll want the options open for sure.
Richard, what do you make of the inflation numbers last week? Because as Fed Governor Waller himself said, I mean, one data point does not necessarily make a trend.
Well, I respect and know Chris Waller, worked with him, and on that point I agree. But that said, I think there's more than just one data point. Some of the details in that report and in prior reports, I think, were encouraging. So I do agree, and I think, quite frankly, the Fed several times in the last several years, including when I was there, got burned when they looked at data that was improving and extrapolated that. So I think this committee will certainly be wary of declaring mission accomplished and victory, but clearly they'd rather have data like last week's than some of the numbers we were getting earlier in the year.
Richard, do you see a soft landing as still being achievable, and how should bond investors be positioning at this point?
What I see is very achievable, and I've used this term before, is a softish landing. What's the difference? In a soft landing, you actually disinflate and entirely avoid a recession. I think that'll be tough to do because I do think some modest rise in the unemployment rate, say to 4.5 or so, will be required. And typically, when we get a rise in the unemployment rate like that, it's always been designated a technical recession. I think a softish landing with some slowdown in growth and some modest rise in unemployment is what the Fed is aiming to achieve. And I think they have a shot at doing that. But I think the important point for your viewers is that the Powell Fed will keep at it, as they said, until the job is done, because ultimately they want to return inflation back towards the 2% longer run goal.